Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 6:30 in New York. It is Wednesday, 6th day of May, 2020, and this is the daily report for gold and silver. Gold and silver plummeted today, and that at the same time that ADP came out with their jobs report, which was the worst jobs report in the ADP payroll system history. Now, given that report didn't start coming out till 2002, so there's not that much data, and traders are waiting to see what the Labor Department says on Friday with the big report. On today's show, we will cover the most important topic on my mind, and I'm sure other traders' minds, which is, did today's price decline cause sustained or major technical chart damage? We'll ask and answer that question on today's show, but first, to the price board. Gold futures basis the most active June contract traded to a low today of $16.83 before recovering slightly, only a couple of dollars off of the low, and is currently fixed at $16.8610. That is a net decline today of $24.50. When we look at spot pricing, that is sitting at $16.8550, down $20.15 on the day. But what is most noteworthy is the spread between spot and futures, which now has contracted to just under $3 in terms of its differential. We saw platinum decline by about 3%. It is at $763.40. And palladium was the lone metal to increase on the day, up $5.90, a net gain of about 0.3%, $17.6240. And lastly, silver. Silver did decline by a little over a full percent, losing 17 cents, and is back under $15 at $14.94. And that was all pressured with strong headwinds from a strong U.S. dollar, which is back above 100. After factoring in today's gains of 0.44%, is at 100.2. Let's take a look at our technical studies. The real question we need to ask is whether or not today's sharp decline indicates chart damage on a technical basis. We'll look at the compression triangle that I've been talking about in the next chart. But the one thing that we can say when we look at this simple daily chart is that we have been trading in a fairly wide but decent range. As to the question of whether or not we have sustained technical chart damage with today's sharp sell-off, my answer has to be no. And the reason that I am saying that is that when we take a look at the recent range in the market, we didn't break the 1675, that's that first blue line right here, nor did we break 1665, which represents the low that came in right here. And so the fact of the matter is we have a range that continues to compress. Now, we've put out this compression triangle, a pennant formation, and I'm simply using these highs right here and here. And then on our lower chart, I'm fixing it from this low here, as well as this low here. And when we do that, what we can see is that although it broke just below the triangle, it's not really at the apex yet. But more importantly, if we got follow-through selling on Thursday and Friday, we will most certainly challenge these two critical areas right in here, our support areas, which come in between 75 and 65. But that has really been where gold has been trading at. It has definitely been range-bound. So our short-term numbers indicate pretty solid support between 1665 and 1675. That's our levels of support. We have our first level of resistance coming in right around $1,700 per ounce, and that is a key psychological level, but it is also right around where the 50-day moving average is, which I believe is about 1705, with major resistance coming first at 1764 and then at 1788. That, of course, is the record high for the year. We are looking at a 480-minute bar chart, and what is clear when we look at this short-term view of the market is really that there is substantial historical data that has come in recently over the last month and a half that clearly indicates that 1675 is a key level that needs to hold. You can see it acting as support here, somewhat here, although it did dip into that area. Definitely right here, as well as recent activity that we have seen over this last trading day. My recommendation is that we maintain our neutral stance in gold with no active trades. Traders, this has been an extremely active market with huge price swings in silver. Silver under pressure today, currently trading at $14.97.5. When we take a look at a daily chart and try to ascertain basic support and resistance levels, I first am drawn to this low that came in here, which came in roughly at the end of March, beginning of April, just above 1376, really at about $14. And that's where I'm pegging our first level of major support right in here. In terms of resistance, we really saw this particular price point, about 1640, act in a way that it showed, historically speaking, that it was very, very good support right in here and right in here, just before the market fell out of bed and dropped to these unprecedented lows of below $12 an ounce. We can also see this area right here as giving more data suggesting that these are important areas. So 1614, that is our major resistance, with minor resistance at 1529.5. That is the 61% retracement right here. And in terms of support, I've got to peg support at approximately $14 per ounce. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.